Well, the crypto market has had quite a rough 24 to 48 hours as a result of us getting news that Donald Trump would be placing tariffs on Mexico, Canada, and China. Now, as a result of this news, we started to see people again just absolutely dumping in mass, altcoins falling anywhere from 10 to 15%, leaving a lot of investors wondering what in the world is going on, why is this happening, and what does the future of crypto look like? And so, what I wanted to do today is make a full video for you all, just going over exactly what is going on, why it's impacting crypto like it is, and what I'm expecting from crypto next. And so, look, we have a lot to get into today, so let's not waste any more time at all, and let's get straight into it. Now, if we head over to crypto bubbles, you can see what I mean. The market is down 7, 8, 9% across most cryptos, with some going as high as 14 to 17% just within the last 24 hours. You head over to the week, things get even uglier, with many cryptos down anywhere as high as 30 to 40%, and then you head over to the month where there's things down as high as 40 to 50 to 60%. If we head over to Bitcoin itself, Bitcoin is currently below $100,000 at the time of recording this video, leaving a lot of investors honestly feeling like the crypto market is coming, the bull market is coming to an end, and the bear market is on the way. Now, although I don't particularly agree, I do understand why people are so frustrated, especially when you see altcoins getting brutalized like they have been. And so again, I want to talk a little bit about what exactly is going on and, well, what I am expecting from the market going forward. So first and foremost, let's talk a little bit about tariffs, what tariffs are, why they're impacting the market like they are, and kind of how things have played out historically in situations like this. Because you remember I made a video for you and I said you're being lied to, and it's obvious. This was like maybe a week ago. What I said in that video is that during moments like this where there's uncertainty, everybody wants to convince you that this has never happened before because it's the easiest way to make you truly panic. And you'll start to make some very emotional decisions, which will typically lead to you losing and the lizard people winning. And this is another one of those situations. A lot of people are saying nothing like this has ever happened before. Crypto's never seen anything like this before. It's just simply not true. And I'm going to explain that to you. So again, look, we got a lot to cover. So let's first and foremost talk about, what's going on and how historically this has impacted crypto. But rather than me just kind of sitting here and staring at you very oddly for the next 10 minutes talking like this, what we're going to go ahead and do is we are going to go back and we are going to jump into Tyler's totally awesome presentation, because it's a presentation and it's totally awesome. Now, what happened? As I mentioned before, Papa Trump decided to put tariffs on Mexico, Canada, and China. Now, a tariff is quite simply a tax placed on imports or exports, where I may go in and say, hey, Canada, I don't like you. Let's just make something up. I'm putting a 25% tax on your lotion. So if you want to sell lotion in the United States, if you want to import it into the United States or export it from Canada and import it to the United States, you got to pay 25% more. Now, that obviously is a little bit conflict. That's going to cause conflicts. That's very confrontational. And typically speaking, when you do something of this nature, right, when you go in and do that, things don't go so well, especially in the short term. Importing gets more expensive, in which passes, then passes the cost on to consumers. And what I mean by that is, instead of Canada being like, okay, we'll just pay 25% more. No, they go in and raise the cost of that product by 30%. So then the consumer who's trying to buy that product has to pay more if they want to get it, because the company or country doesn't want to carry the cost of the tax that was implemented on them by the United States. It's very annoying, because that means that, oh, Canada and the US are beefing over something. Now I got to pay more for my lotion. Listen, it is the winter and I have brown skin. I need lotion. It's stupid. And we get passed on to us. And that's a little annoying. It's something you don't particularly love to see. Now, in addition to that, increases in inflation could result in interest rate hikes or simply just a slowdown in QE, which is quantitative easing. Now, what this means is that instead of the economy actually progressing in a direction in which things are starting to get a little bit more flowy and there's more liquidity, it can actually go the opposite direction. If these tariffs do cause a jump in inflation, well, then the Fed might have to jump in and start doing some things, and some very weird things, to slow down the economy or slow down inflation, which then oftentimes does put even more constraint on the general average person, because money gets more expensive. Not good. You don't like to see it. And then in general, and another big one here, is trade wars could cause even more macro uncertainty. How does this snowball? How does it go from just, Canada and Mexico and China? What are they going to do in retaliation? If they retaliate, will we retaliate? If we retaliate, will it impact someone else and cause them to retaliate? And next thing you know, it's an all-out trade war, and it's just absolutely stupid. And so because of this tariff and because of these taxes, people are concerned, and they have valid reason to be concerned, which is the reason why you're seeing so many people taking flight away from their more risky assets like altcoins. Now, you may be wondering, why in the world would Donald Trump do this? Well, there were three main reasons, two of them being, very big, I would say. Drug trafficking, obviously. So Donald Trump has been quite expressive about his distaste for the fact that countries like Mexico and China specifically haven't been really doing that much to try to stop the importing of fentanyl into the United States. Obviously, there is quite clearly a fentanyl epidemic here in the States, and a lot of that fentanyl comes from Mexico and China to some degree, or through them at least. And as a result of that, Trump wants tighter regulations on that, and until he gets it, he's going to continue to do things to hurt them. A very Trump-esque thing to do. Now, illegal immigration. If you've listened to what Trump speak for at least 15 seconds, you've seen the word illegal or heard the word illegal immigration come out of his mouth. I don't even particularly need to explain this one. He wants it to stop, so he's going to try to put these things to impose a little bit of harm on the countries until they kind of just do what he wants. And then the last one is trade imbalances. Now, whether you like it or not, right? Whether you like these first two or not, you can't say that the trade imbalances portion is untrue. Okay. Trump has said that there has been a major trade imbalance here in the United States between us, Mexico, us, Canada, and us and China. And you can see the statistics. In 2023, the U.S. exported $147 billion to China, in which China then exported $426 billion to the United States, meaning we made $147 billion off China, which is not how it fully works. That's a very surface level simplified way to explain this. And China made $426 billion off the United States. And so in a situation in which China's making three times more off of us than we are off of them, well, Trump doesn't like that. Now, again, it goes way deeper than that. There's a lot of other things that go into that, but just look at it very simply because I don't feel like explaining it. Now, the U.S. exported $322 billion to Mexico, where Mexico exported $475 billion to the United States, and U.S. exported $354 billion to Canada, in which Canada exported $416 billion to the United States. So what you can see is that in Trump's mind, and statistically it is true, again, this is very surface level, the U.S. is making less off of other countries than they are making off of us, and he doesn't like that. If you've seen any of Trump's campaigns from 2016, 2020, or 2024, he always says he wants to put America first. He wants to bring America back or make America great again or whatever he wants to do. And one of the ways in which he wants to do that is by making sure that, the U.S. can become more self-dependent. He's under the belief that the United States has fallen into a trap of relying on everybody else, right? We need them for this and them for this and them for this. And then we're going to print money and we're going to send it there, right? We're doing everything for everybody, but we're not putting ourselves first anymore. And Trump doesn't like that and he wants it to stop. Hence why he is starting to do these things to bring down illegal immigration, to bring down drug trafficking, and to reduce the trade imbalance. I am not giving my opinion. I am objectively speaking on what Trump is doing. Now, as a result of this, what impact does this have on the market? Well, generally speaking, there have been many periods in which there have been tariffs and things like this. These things are oftentimes called trade wars, but let's just call it conflict. Well, generally, there's a lot of short-term volatility in conflict, meaning that, of course, you have the U.S. doing something to Mexico, and Mexico retaliates, and Canada retaliates, and it's kind of a lot of volatility. There's a lot of uncertainty. No one really knows what's going to happen. But generally speaking, in the short term, things do look a little bit ugly. I will say that. Oftentimes, there could be temporary shoots up in inflation. That could, of course, put constraints on the economy from the Fed. And it does look generally a little ugly, especially within the period in which it's first kicked off, right? So when that volatility first hits and people first get uncertain, it does usually start to make things get a little ugly. But what I have come to recognize throughout my research is that long term, these things actually don't go that bad, right? Long term, they will typically find some sort of resolution. So from the conflict portion, usually there will be a resolution. This is going to hurt both countries. The U.S. is thinking it'll hurt them longer than it'll hurt us. It'll hurt them worse than it'll hurt us. So they'll be willing to negotiate and bend to our will to some degree. I don't know if that's the case. That's just what we're thinking. And so as a result of that, what I will say is historically, since it is going to hurt both of them, you will usually see some sort of resolution made, oftentimes less than a year. Now, there have been some ones that have lasted, 12 months to 18 months, especially if what that one country wants is very big. But I will say to some degree, what Trump is asking for isn't that crazy. He just wants tighter regulations around certain things like drug trafficking, obviously, and immigration laws. And I think that's probably going to end up coming to fruition. Now, from a United States perspective and our economy perspective, over the long term, tariffs like this actually do generally force domestic growth. growth. So many look, let's just, like if and let me just, I want to use the presentation, dang it, I made it. It does typically cause long-term job growth and expansion, which can usually lead to historic bullish periods. And the reason being is because if things become more expensive to import, it is going to become easier and cheaper to do it here. So many people and many companies are going to go out and say, oh snap, it's going to cost so much more to get the bottles for the lotion from Canada. Why don't we just make the bottles here? And what you'll typically notice after periods like this is that domestic growth actually increases a ton because, of course, we're kind of forced to. We have no choice. So, although in the short term it can be a little ugly, especially for inflation and prices and just general things of that nature, typically what you'll end up seeing happen is that inflation will sort itself out a little bit as the Fed does make adjustments. And then you will see job growth as a result of more domestic manufacturing jobs and agricultural jobs and all these things having to get bigger to kind of facilitate these operations that changed as a result of the tariffs, right? And you will start to see usually many different industries benefiting from things like this over the long term. Now, many of you are going to say that's not true. That's not how this works. I'll just give you an example. Because again, people like to get forced into an idea of pessimism, in my opinion. They're going to look at a situation like this with tariffs and say, nope, this cannot result in anything good. This cannot result in anything bullish. There's nothing positive that could possibly come from this. And the only reason you feel that way is because your bags are down. I understand. I'm down 30-40% as well. I get it. But you have to be objective here. And objectively speaking, if we look at something like what happened a couple years ago, you will see that when everyone's saying that this cannot result in anything positive, nothing good will come from this, it's simply just not true. Now, let's introduce NAFTA. Now, NAFTA was something that was signed in 1994. It was a trade agreement between the United States, Canada, and Mexico, in which its goal was to eliminate trade barriers like tariffs and quotas, making it easier for goods and services to flow between the three countries. Now, the main objective was to increase economic integration, boost trade, and promote investment while making North America more competitive globally. Now, generally, that sounds great, right? Sounds like it would make a lot of sense, right? Kind of. It did work in many ways, and it did make North America much more competitive globally, but that was at the loss of the United States to some degree. As a result of NAFTA, over the course of roughly, let's go ahead and call that 20 to 24 years, what we saw was a ton of job loss and outsourcing here in the States. So things became substantially cheaper to do over in Canada and Mexico, in which many companies just left here and went to Mexico and went to Canada, in which it led to the loss of nearly 1 million manufacturing jobs as companies moved production to Mexico for cheaper labor. There was wage stagnation and decline, in which, of course, the decline of unionized manufacturing jobs then forced many workers into lower paying service sector jobs. There was a trade deficit with Mexico, in which it went from a surplus to a $101 billion deficit. There was a decline of small American farms, which, of course, as a result of lower cost imports from Mexico, hurt small U.S. farmers, really hurting the blue collar workers. There were environmental and labor exploitations in Mexico, in which U.S. companies exploited weaker regulations in Mexico, which led to more pollution, poor working conditions, and bad environments for workers, and then a loss of economic sovereignty, in which NAFTA's investors' state dispute settlement allowed corporations to challenge U.S. laws that threaten their profits, limiting government control. So as a result of NAFTA in 1994, we saw all of these things happening. Well, guess what happened? Well, Donald Trump comes in and says, no, I don't want NAFTA anymore. Hello, USMCA. So Donald Trump, his campaign, he was saying, I am going to get rid of NAFTA. I am going to make America first. I'm going to put America first again. This is what I'm going to do. I'm going to put tariffs and I'm going to tax Canada and Mexico because what is happening right now is unfair to America. And what does he do? He does that. Trump goes in and he starts placing all of these different tariffs. It was like 25% on aluminum and 10% on steel, or maybe the other way around. But these were things that were going to harm Canada and Mexico until they came up with something or agreed to negotiate with Trump to get rid of NAFTA and implement the USMCA. Now, what happened as a result of this? Well, Trump gets in, he starts saying he's going to do all of these things. I'm getting rid of this, I'm getting rid of this, I'm getting rid of that, I'm taxing you more on that, I'm taxing you more on that and that. And obviously Canada and Mexico, they get annoyed. They're like, why would you do this to us? We had a good thing going, because it was more beneficial to them, obviously. And they get retaliatory and they say, okay, well, we're going to do this. We're going to increase this, we're going to tax the US on this and that and this. And they were starting to go back and forth with us, similar to how it is right now, in which they said, okay, well, if you're going to put taxes on us, we're going to put taxes on you. And what do you know? All of the fallout begins exactly as I mentioned earlier. You start to see inflation go up, especially in different departments such as the automotive industry, manufacturing, agriculture, and all of these things. You start to see a lot of uncertainty in the markets. Crypto was already in a bear market, and so we did see the crypto market start getting even more uncertain at the time. And in the short term, things were actually actually pretty dang on ugly. But as the months did go by, and as we did start to see negotiations going on between the US, Mexico, and Canada, we actually saw them come up with something called the USMCA because, quite simply, they were tired. They didn't want to keep harming their citizens. They didn't want their conflicts to start hurting the citizens, but there needed to be some sort of change because what was happening was an imbalance. And that's where, again, the USMCA came in. This replaced NAFTA in 2020 to modernize trade, strengthen labor protections, and boost North American manufacturing. It introduced higher wage requirements, stricter auto manufacturing rules, expanded U.S. dairy access to Canada, and added digital trade protections and included a sunset clause for periodic review. Now, it wasn't easy for this to happen. As you can see here, again, in 2018, the US imposed tariffs of 25% on steel, oh, that was backwards, yeah, and 10% on aluminum imports from various countries, including Canada and Mexico. In retaliation, Canada announced tariffs on US imports, and Mexico implemented retaliatory tariffs on US goods. Now, let me give you the timeline of how this all played out, and I'll show you how this impacted things like crypto. Because you remember I told you people are saying we've never seen stuff like this happen before. Now you can start to see just 5, 6 years ago, we were in a similar spot. Now, it wasn't the same because what's happening right now is much more dramatic, more significant, but it was similar. What we can see here is look how this moved. Look how this happened. Because everyone, again, wants you to believe that nothing positive can come from this and nothing good is going to come from this, and there's no way this is going to turn into a positive thing. Let's just look at what happened historically, because that's all we got to look at. In 2018, Trump imposed tariffs on steel and aluminum, triggering retaliatory tariffs from Canada and Mexico. Trade tensions escalated, leading to NAFTA renegotiations. By late 2018, so this was only about 4 or 5 months later, the three countries reached a deal on USMCA, which was signed in 2019 and fully implemented in 2020. Now, the reason there was a delay wasn't because they were arguing. It was because once you reach a deal like that, then it has to go through Congress, and then you have to go through your own governmental bodies to actually make it happen. You can't just agree without the approval of the other governmental bodies. It got held up here in the United States, if I remember correctly, because I believe it got held up in Congress because the Democratic side was saying that they wanted stricter regulations on labor, things like that, and it kind of delayed things a bit. But in 2020, we did see an agreement met, in which the agreement then ended the tariffs, modernized trade rules, addressing issues like labor protocols, auto manufacturing, and digital trade, which then did solve the majority of the problems in which we had seen before, especially the exploitation of U.S. workers. So what we saw back then was something rather similar. And again, not the same, because what we're seeing right now is much bigger, more significant, and we have China brought in. But we have seen how historically this will play out in a bit of a smaller time frame. Now, when we compare back then to now, let's go look at what the crypto market did. So this was back again in 2000. Let's go here. Let's go to the weeklies. Okay, boom. So that was in 2018. Let's go look at what happened in 2018. So in 2018, we were right here. So what you can see here is that throughout the end of 2018, we were already in a bear market. So adding uncertainty in a bear market obviously will make things worse. But what you'll come to recognize is that at the end of 2018, although it was bad, and we did see the market have a little bit of fallout and things did get a little bit ugly, that actually did serve as the bottom. And as things started to get resolved, and as we started to see this push into a bit of a better direction, the crypto market actually started to find its footing and then entered into a bull market right after. And by the time 2020 ran around and we actually saw this implemented, that was a time in which the market really started to rally. Now, obviously, there were other things like the Bitcoin halving and retail investment and much more, and of course stimulus from the US government because the pandemic started right here. So this wasn't because of the tariffs and the trade war that was going on, but it did impact it. And as you can see, in a period, because we didn't have stimulus checks back in 2019, right? That wasn't happening in 2019. That was pre-pandemic. And you can see the crypto market started to recover before the stimulus, before the quantitative easing from the Fed, right? And so in a period in which we were still seeing a bit of a trade war and, negotiations going on, the crypto market was able to recover. And although it did get a little ugly in the short term, in the long term, it was capable of recovery. And that, to me, is a very prime example of, even in a time in which we were in a bear market, it didn't destroy crypto. It didn't end anything. Sure, things got a little bit worse in the short term, but we did see recovery. And not only did we see recovery, we saw that ignite the beginning of the next bull market as things did progress in a bit of a better direction. And so, am I saying that right now, we're going to do the exact same thing? Am I saying right now that we're going to see crypto just absolutely nosedive and then take off? No, I'm not saying that. But what I am saying is that you're being brainwashed into thinking that we've never seen anything like this before, when in just the last cycle, we saw something similar. Now, again, what we're seeing right now is a little bit bigger. There is a little bit more magnitude to it, right? And it could get a little bit uglier than what we saw historically in terms of the actual uncertainty, because again, this is now a tax on basically everything to some degree. So it's not just aluminum, steel, it's like everything. So inflation could get a little worse. And then, of course, you never know what's going to happen with China. We already had a trade war with China a couple years ago, and we've seen how that goes. It gets long, it gets delayed, it gets extended. But history says that in the short term, although things will get a little uncertain, they may get volatile and they may get ugly. In the long term, it doesn't stop anything. It doesn't slow anything down in the long term, in the grand scheme of things. And it's unwise to believe that just because of, there's tariffs or something like that, that it's just going to be the end of crypto. Now, could this be the end of the bull market? Sure, it could be the end of the bull market. But what I want to tell you is that if you just look at what is happening here, look at the charts. That's all I want you to do. Throughout the bull market we've been in, we've had 3 periods that we saw exactly what's happening right now happen. We saw this period from right here in which prices went sideways, and we saw more volatility than right here. We saw this one right here, which was similar in size and length, just a little bit shorter than what we're seeing right here in terms of this sideways movement here on Bitcoin's chart. And then just last year, we saw much more volatility and a much longer period in which we went sideways like this. Now, yes, I'm aware. Back then, we had many different catalysts coming up. We had the inauguration, we had all that stuff coming up. I'm aware that the time is different. But what I'm saying is that nothing that has happened from a chart perspective has given me any sign or signal that this bull market is over. We are still within the HMZ. We are still within the high manipulation zone, which is a period in which cryptos will go up and down, liquidating everybody on every side until retail investors tap out. The institutions and lizard people can't suck you dry of any more of your crypto. And once they generally stop sucking you dry of all your crypto, then the market has the ability to move in whatever direction it's going to go in. And we are still in that HMZ. We are still in this sideways period. We're still in what I think could be an accumulation zone. Until we break out of this and create lower macro lows and lose majority of momentum and institutions start selling, I'm just not convinced that the bull market is over, because we're doing the same thing that we've been doing for weeks. The thing about it is, it's recency bias. Everyone says every single time the market has fallen here, the market fell here, the market fell here, the market fell here, and here, that the bull market was over. And every time since then, the market recovered, the market recovered, the market recovered, the market recovered. And am I guaranteeing that the market's going to recover? No. But what I'm saying is, it's doing the same thing it's been doing. So why is it now this time is different than this time, when historically what we're seeing from an economic perspective, although it can be ugly in the short term, in the long term, bullish periods do usually follow behind seasons like this. And so, for me, I'm just not convinced. I'm not convinced that the bull market's over. Everyone's screaming, well, altcoins are down a ton. Altcoins are down, the smaller altcoins are down the most. If you go look at something like Total 2, the total market cap of crypto, which is going to be this one right here, the total market cap of crypto is still sideways. It's still in its structure. It is still going sideways from December. So although it feels terrible and it feels bad, I need you to zoom out and get a grip. You got to thicken that skin up, because quite frankly, nothing that bad is happening. Yes, I know some of our positions are ugly. Pepe's down 40%, Floki's down 40%. But what you'll come to recognize is the majority of cryptos that are taking the worst of a beating are the ones that have the least value. And so, of course, smaller cryptos and meme coins and microcaps, yeah, they're going to get beat up during uncertain periods like this. But the general crypto market is in the same place that it was in November of 2024. And you got to understand that just because you feel bad right now, it doesn't mean that everything is as bad as it feels. And maybe you're just being blinded by how bad it feels to see your portfolio down. And maybe we're a little bit spoiled to the gains. Things were so good towards the end of last year. Everyone was so excited about the bullish period we're in that they got a little bit spoiled to it. And so when you have a period like this where things are sideways, it starts to stress you out. And I understand that. But you got to thicken your skin up, because as somebody who's been through this, guys, just take it from me. As someone who's been through this, someone who went through this, then someone who went through this is nothing. It's nothing. So you just got to get used to it and accept that we are in, the position that we are in. And so, with that in mind, my general thesis is yes, things may get ugly in the short term. There may be a lot of volatility and uncertainty, and things may go up and down and up and down. You're going to see rips up and rips down. You're going to see people getting liquidated on both sides. But quite frankly, if you just stick to the plan, if you just stick to your strategy, don't trade on high leverage right now. Don't do anything like that. You quite simply just wait and pause and allow this to play out and allow all of these things to happen with Trump and the Fed and inflation and much more. You're typically going to be in a pretty good spot if you just sit and wait. And that's the best thing to do. As a matter of fact, that's what I told everybody over in the school a couple days ago. Like, this is probably the biggest period of sit and wait that I've ever had before. I haven't done a leverage trade in weeks because we're in an HMC. There's going to be a lot of volatility and a lot of manipulation, and there's no point in playing in it because eventually it will resolve itself. We'll be out of it eventually, and things will much be more clear. I'd rather trade when things are much more clear than how they are right now. And so, with that in mind, I just wanted to share that with you all today, and I hope this video was valuable. Please do let me know your thoughts down in the comments below, whether you agree with me or disagree with me, whether you like the video or don't like the video, and let's have a little bit of conversation there. You guys know I try to respond to every single comment, so I'll try to get to yours as soon as possible, and I appreciate you all for joining in. See you, everybody.